Time, the Kenya Mortgage Refinance Company is planning to refinance 7,000 mortgages by the end of the year. CEO Johnston Oltetia says they will achieve this by carrying out public awareness campaigns to demystify mortgage refinancing in the country. Take a look.
Low mortgage uptake in the country has long been associated with the high costs and punitive experiences of defaulters. But the Kenya Mortgage Refinancing Company now says it will correct this by engaging Kenyans directly.
The solution that KMRC brings in is KMRC provides both long-term financing but at fixed rates. You know, when you have a fixed rate, then your circumstances, it doesn't matter how your circumstances be, because the rate remains the same for the life of the loan.
Part of the campaign, Olteita told Citizen TV during an interview, would involve lowering the interest rates on the fund they guarantee. KMRC currently lends to banks and financial cooperatives at an annual interest rate of 5%, enabling them to write home loans at a rate of lower than the average market of 11.94%.
Two things affect a home or affordability of a home most significantly. Number one is the cost of financing, that is the interest rate. But that's not even the highest. The biggest cost is actually on the tenor. The longer it is, the more possible for someone to be able to qualify for a home.
The initiatives that the government is setting up, there is a big likelihood that this might change. It might take a bit of time to get to where we wish to be, but I see it slowly turning positively.
This they hope will increase the number of mortgage accounts issued this year to 7,000 after registering 1,427 new accounts worth 2.76 billion shillings, which they issued to financial institutions at the tail end of last year. KMRC says their efforts, coupled with the State Department of Housing efforts to push for affordable housing, will significantly reduce the housing deficit in the country.
So the government itself has obviously tried to do a lot of support by incentivizing the developments or providing incentives to the developers for purposes of pushing the supply side to be able to meet the demand.
If it works, supported by the KMRC initiative, then there is a higher likelihood of a bigger uptake of mortgages and a higher likelihood of more homeowners in Kenya, especially in the urban areas.
KMRC is expected to raise a bond in the third quarter of 2021 to boost its funding base, which already sits at more than 60 billion shillings, including credit lines of 35 billion shillings from the World Bank and Africa Development Bank. According to data from the Central Bank, there are 27,993 mortgage accounts as of December 2019 from 26,504 accounts in 2018. Faisal Ahmed, Citizen TV, Nairobi.